Just wanted to do a quick follow-up video on that conversation that started with Brett's post about going against the trend. His chart was intraday. I'm an end-of-day trader, so I mostly focus my trades on the daily chart, but use timing from intraday, etc. But what the conversation was all about, going against the trend, followed up so well in the last 2 days trading, and now that we've broke the June lows, it's particularly interesting that a few confluences have shown up to point out a very, very similar target. So I thought I'd just do all this real quick. So here you can see the green triangles and the red triangles that I place on. These are mechanically determined based on my indicators. That doesn't mean a trade is initiated. That means there is a signal to evaluate. So you don't always get into them. This is the perfect case because here we have it. We're definitely in a long-term downtrend or a longer-term downtrend. Got a signal for bullish, and what happens here is I go to evaluate it. I did not take that trade, and 2 days later we have the opposite signal, a bearish signal. And now that it breaks the June lows, I was looking a little closer and posted a few days ago a chart kind of showing a couple of targets in the future. And now I've noticed some more confluences of different patterns that actually point to that exact same place. So I thought I'd show those now. So as we look at this chart, we have kind of a messy head and shoulders here at an angle, which the neckline here, this dotted line, happens to be just a standard trend line. It's the neckline, and it happens to be a supply and demand dynamic trend line. So those three things usually don't all add up at the same time. Usually get one, maybe two. So I decided to follow that pattern through with the head and shoulders. So I've taken from the top of the head to the neckline. I've copied that line over to here where the breakout was. And it's very much following through as a classic head and shoulders. We have broken through the neckline, retested, and we're starting to go down. And now that we've broken that left shoulder completely, in theory, you have a high probability of getting back down to the target here, which is not much lower than where we're at now. But what I found interesting was a couple of different things. One is, being a supply and demand trader, I'm going to bring back here these couple of targets that I put out there previously, and now the bottom of the head and shoulders target did not really come to any area or order block that I found from the past, which is a little unusual. So I was just experimenting a little bit with the Fibonacci's, and if I were to do a retracement based on that distance, coincidentally, the 1.618 extension of the target happens to be right in the center of the zone I've had on my chart now for a very long time. I think this zone was built going back to 2021, I believe. I'd have to go back in time and check. But at any rate, there is that points to that place, as well as my order block there from the past. There is one more that also points to that area. I'll make this a little bigger so it's easier to see. Whoops. If you zoom out, you see the triangle pattern, which kind of looks like a continuation triangle, and we are in a longer term downtrend. So I decided to take a look at that. And if you go to where the bottom of the triangle starts, and that day is there, I'll just draw a vertical line from there to there. I will copy and paste that line, and we'll put it where it broke out, same day as the head and shoulders breakout. And then we'll just zoom out a bit, and you notice that also comes right down to the center of that target. That's a series of confluences. I don't think I've ever seen so many point to the same area in a short time. Just thought it was interesting. Let me know what you think, and have a great day.